Thanks very much for joining us this morning, Louise. Firstly, if we could talk briefly about this breaking news that we're seeing with the downgrade by Moody's. Is this anything we didn't know already, or does this come as quite a shock for the UK banking industry, would you think?
I don't think it comes as a shock, to be honest. We know that the whole of the banking industry is probably needs some help at the moment. We know that. We know there's a big issue for European banks in particular, and it's probably playing a little bit of catch up with some of the other ratings agencies. So it's not a huge shock, but clearly it's not a good thing. And we are seeing some of the share prices down this morning. Royal Bank of Scotland down 3.5%, Barclays down 2%, Lloyds down 3.7%, Standard Chartered and HSBC unchanged. Now, those aren't huge moves for bank stocks. You know, bank stocks can move 10% in a day. So they're a fairly muted reaction at the moment, suggesting that it's not a huge stock, but clearly not good news.
OK, and so moving on to what we were talking about a minute ago, I was saying there was optimism yesterday on the markets about the moves by the European Central Bank. Is there any chance, in your opinion, that we'll see some sort of fix on the recapitalisation of European banks in perhaps the next few days?
I think we're a very, very long way away from that plan. You know, I look at these equity markets and I'm kind of shocked, and I would love someone to explain to me why we've seen a sort of 7 to 8% rally, and yet we've got, you know, the governor of the Bank of England, Mervyn King, telling us the economic scenario is as worse as the 1930s and could end up being worse. I mean, this is a man who clearly knows what he's talking about, has got his finger on the pulse, has fabulous information coming to him, and he's basically saying, not quite Armageddon, but it's really absolutely hideous out there. And so I look at these equity markets rebounds on this very fleeting hope that Merkel and Sarko are just talking about bank recapitalisations. Well, if you look at the figures, European banks need anywhere between 100, 200, 300 billion euro. I mean, some of the figures go up to 600 billion euro. So, you know, it's not that. It's not going to happen overnight. That requires an awful lot of taxpayers' money to go in and sort the banks out. You know, they're not just going to go at the end of the weekend, yeah, actually, we'll do it. I sometimes feel we need a little reality, and it's going to be some time to get that organised.
Well, Louise, Lorna, Shaddick here in the France 24 newsroom. You talked about that fleeting hope there, and even if that bank capitalisation is secured, a country like Greece defaulting could still have major repercussions as well, wouldn't it?
I almost feel when we talk about the bank recapitalisations, yes, we desperately need it, but it's only one of the many things that need to be put into place. And it's almost like you're dealing with, you know, you're dealing with the symptoms rather than, you know, actually curing the disease. And the disease is Eurozone over-indebtedness. Nation states having way too much debt, and their electorates, their populations, getting used to a standard of public sector support and services that, frankly, you know, tax income just does not support. And I think that's what we in Europe need to really understand, that if we want a lifestyle where we can retire when we're 55 on a nice pension or whatever, then we have to work hard to pay for it. And that is the essential problem. So bank recapitalisations, yeah, marvellous. But actually the problem, the underlying problem, is highly indebted Eurozone nations.
OK, Louise Cooper at BGC Partners, thanks very much indeed for talking to us here on France 24.